Okay, so looking at this week's price action, I'm going to show you exactly how price found resistance using this concept and this model, and show you exactly how price found, used, engineered, and then moved away to the pip. I'm not saying every trade will set up to the pip, though this particular example on the yesterday for me is still today for you, possibly, but what I'm getting at is you're looking where you are at current levels, right? So go back 3 or 4 days. Where are we? What previous data are we looking at? Well, firstly, you can identify this particular grey day here, but before this day happened, before the outside day came about, our level was placed over here. So here's your inner price engine low. So you have the price engine low, the inner price engine low, and the outer price engine low. So you're in the lower end of the whole price engine. So looking at that, you've got your inner and outer. So what we're looking for is the lower time frame confluences when price is up at these levels. So let's go down into a 1 hour chart and take a look. Now I'm going to put the day dividers on. Now, from the previous presentations that you have watched, knowing that knowledge, you're looking for the inner price engine on this lower time frame being a 1 hour chart. So this particular move up and down here, this high that was made was created this particular bullish candle is an outside, a 1 hour outside candle, and the inside candle being in confluence with the higher time frame price engine, the daily price engine. So this particular move up then down is somewhat of a market structure break to the downside. And on that particular day, this liquidity pool was created. Now, liquidity pools I got from one of my mentors, and you probably know who that is. And even though you can see that being a stop raid, it's these price mechanics prior to this even happening. The levels that we have put forward were here before this was even made. So what we're looking for is these type of setups around the daily price engine. And bringing this internal structure forward, you can now see the liquidity pool that was rated. Price formed a high during a session high, broke back down and pulled back into, as an optimal trade entry if you're trading this time of day anyway, being an optimal trade entry into the intraday price engine that was developed around the daily price engine. Now, there are so many examples that I can show you using any pair. So what I will aim to do is I'll go over a few examples that I've already saved, and you can have a look at that. And then in the next video, we will take a look at current levels and intraday levels that set up on those current levels. So we'll do it I'll do it on a live chart, and I'll be able to show you examples that have developed and ones that are going to develop. And we'll do that over a series of videos as well, and we'll put trades in there. So if you've come this far with my material, I'm pretty sure you can understand what this is about now. If you're here as a new trader and you haven't gone through my previous material, especially around 17, 18 and this year, 2019, I suggest going through those pages and those videos, then you'll be up to speed. So just looking at this, as I was saying in the previous video, when price comes up to these levels or down to them, you're not nailing a trade straight away as soon as price hits these levels on the daily price engine. You're waiting for price to form around the daily price engine. And you can look into the weekly chart as well, and you'll see daily price engines work around the weekly price engines and even further the monthly. So if you're looking for intraday setups, the daily price engine works really well. And of course, if that's in confluence with a weekly, then even better. So it's up to you to set up your own charts and pairs that you want to trade. Personally, you don't need a lot of pairs at all. You can even just do this with one pair. If you're trying to do this with a lot of pairs, it's actually very difficult. I've tried it, and you lose focus. So you spread yourself too thin by trying to trade too many pairs. The key is to trade 1, 2, or 3 at max, in my opinion. I myself, I like Aussie and Kiwi, and I also watch AN as another indicator for Aussie and Kiwi, though I prefer trading New Zealand dollar and Australian dollar, though you will definitely see this happening trading British pound and fibre, and I'm about to show you some examples of that. So now you've got the structure of the whole model. You can put this forward into your own trade plans and start to model it, start to use it. You'll start to understand it more, and more importantly, you'll become more confident in your own system. And keep your risk to reward, keep your risk the same. Don't change it. You're not trying to hit super home runs. You're taking the best from the best levels, if that makes any sense. So let's have a look at these examples and then we'll move on to the next video. Okay, so this is just an example of US CAD, and what you'll see here is the 1 hour price engine, and of course you need your daily price engine in place in order to understand the lower time frame. So this is just an example of where price is doing that around the lower time frame price engines. Believe me, you've got to structure it from the higher time frame. You can't just go, I know this looks unbelievable, and it actually is, though you need to have that foundation. You need to have that high time frame perspective behind it all. So this is an example of pound Aussie. This is a 1 minute chart, and this is a 1 hour price engine, right? So what you can see is I have the Fibonacci set to the inner price engine, the inner range, and the fair value being the 50. You'll see price create liquidity around that fair value as I was talking about. So you can see where they've broken this particular low here below the fair value. They've dipped into this area, into this larger order block, this move down prior to the move up, and this lower time frame fractal at the 50 region in the 1 minute chart also acted as an order block in this particular area. So this support was found, but before they broke the high out, they brought it back down for one more turtle soup scenario, and they accumulated again, and they reused this 50 region as support in order to take out the two highs that were generated. So the previous highs were created, and then they went back down to get their price once again around 184.880, which is an institutional level, 880, and then they pushed it up to take out these particular highs. So on an intraday perspective, this is more of a scalp trade if you're trading this, though like I said, you need to be in the higher time frame as well. So you can go nuts, and you can also keep it very simple and realistic. You only need a couple of good trades a week, 2 to 3. There's many setups all over the place, though you'll go crazy trying to find them all. You're better off just honing in on a couple of pairs, like I said, and just trade the best. Trade the best setup. Euro Aussie dollar here, just an example. On the daily chart, you can see the inside day being blue and the outside day being grey. So you can see your daily price engines there and the levels that were put out in order for current price action to work around. And like I said, put this into your own model, set it up in a way that you can use it yourself. There's many ways to obviously there's different ways to draw and set up your charts to draw your lines and different colors and whatnot, though just get comfortable with something that you're comfortable with. This is just one example of Aussie dollar just before it was about to take out the liquidity that was crouching below the previous inside day. So this particular internal price engine set forward this level, and the connection means that we have a lower time frame price engine connected to the higher time frame. So basically, when price was at this position, the outside element of the price engine was not made until price went down and broke this low. So then we could see that we had a daily price engine in place and that this liquidity was formed under that level. And as it was, Aussie went up and then dropped it. And you already know that we had that, as I was explaining before on the other chart, we already had the daily price engine coming through here in confluence. It was actually in confluence with this lower time frame price engine here. This one was in confluence with that. So this sell in itself was set up on a previous daily price engine level as also a confluence. So previous data is good data. And this is an example of how we look at those lower time frame price engines as confluence to the daily price engine as well. Where the arrows are identifying the connection between the lower time frame inner price engine to the higher one, and how that was used as an order block for resistance on this particular day here. Where the purple arrow is, there was a sell set up, and you can also see how price reaches back into existing lower time frame price engines. The lower time frame order blocks, 1 hour order block here, was used as resistance, and using time of day and intraday patterns, and I think you might know what I'm talking about there. There are ways of identifying common intraday moves, and you can coincide that with these setups as well on particular days. And here we have a lower time frame price engine formed at the lower end of the daily price engine low, and you'll see that formed as an order block, and they use that level as support again to get back up into the upper region of the inner daily price engine to take out that liquidity. And then finally they dropped it back down to the lowest low of the daily price engine. They took that low out as a higher time frame turtle soup setup in order to push price back up into this area again. Okay, this particular example is just using a daily high, and I've used the daily high here on this pair Aussie Swiss franc, Australian dollar Swiss franc, and where it says 5 price engines, you'll see in that particular day 1, 2, 3, 4, 5 lower time frame price engines within that day, and I've just taken that range with the Fibonacci's, and you can see them sweeping price around that high. And same as Aussie US dollar, they formed that order block at that daily high, dropped into the fair value of that range, and then this particular price engine was formed and used as resistance for an intraday sell-off back down into the lower fair value region. And you'll see this particular candle here, this order block, the move down prior to the move up, acting as support for the following day for an Asia low to form. This example here is identifying how early Wednesday sell-off is quite common for New Zealand dollar. And just so happened to be a data read at our levels, and you'll see that worked out nicely as a sell setup. After the previous daily highs were taken out, they then quickly you saw distribution come into the market, and they used that fair value to sell off. From that data read, you saw the sell-off happening from these levels. So there was time and price were in play on this particular sell. And also the common move of the early Wednesday sell-off. Okay, here we have British pound. You'll see I've split the chart, which is a very good thing to do. And you've got your weekly order block in place. And so you know on a high time frame perspective, this particular week found fair value of the order block body. And you saw the lower time frame element come into it. And you'll see the lower time frame price engines set up in a way that they create their own support and resistance. And you'll see this cable, this was at the before cable actually took off, and this was a good buy signal for cable because it wanted to run liquidity on the higher time frame. And as it was, this weekly candle went right up into the order block, the weekly order block, breaking previous week's high. So there you have it, guys. There's a few examples, and I dare say you would have got a lot from this presentation. So if you wouldn't mind, send me some feedback either by email. Don't message me on the public Twitter. If you want to message me on the private Twitter, that's fine. And or an email will do. So remember, stay calm. Don't get too excited. Just let price do its thing around what you're putting forward for yourself. And you want to see these things evolve. And like I said before, it takes a fair bit of practice to understand the price mechanics. But this is a good foundation. If you are a new trader, this is a good foundation for you to work on. And if you haven't watched my material, much of it, and you're fairly new to trading, just go into my NTV New Traders video series. You'll find that on the blog. Just have a run through that. It gives you some good basics about price itself, and also go through as many as the other videos, the previous videos, 17, 18, and the year 2019. Alright guys, I hope you enjoyed this, and I'll see you on the next one. Don't forget that feedback.